Are you in your 30s and wondering how to set yourself up for financial success? This is the perfect decade to take control of your finances and make your money work for you. With the right strategies, you can not only grow your wealth, but also secure a comfortable and stress-free future. In today's video, we're diving into 5 proven investing strategies designed specifically to help you build wealth in your 30s. Whether you're new to investing or looking to refine your approach, these strategies will guide you toward financial freedom. Stay tuned, because this could be the game changer you've been looking for. 1. Start investing early and consistently. The earlier you begin investing, the more you can benefit from the incredible power of compound interest, often referred to as the 8th wonder of the world. Compound interest allows your earnings to generate additional earnings over time, creating a snowball effect. For instance, if you invest $10,000 at an average annual return of 7%, that amount will grow to nearly $76,000 in 30 years without adding another cent. Now imagine the potential if you consistently contribute each month. Starting in your 30s gives you the advantage of time, allowing even modest investments to grow significantly. Consistency is the cornerstone of successful investing. By automating your contributions to investment accounts like 401(k), IRAs, or brokerage accounts, you eliminate the guesswork and emotional decision-making that often derail investors. Regularly investing a fixed amount, regardless of market conditions, helps you avoid the pitfalls of trying to time the market. This strategy, known as dollar-cost averaging, ensures you buy more shares when prices are low and fewer when they are high, smoothing out market volatility over time. When building your portfolio, focus on diversification to mitigate risks. A mix of assets such as stocks, bonds, mutual funds, and ETFs can help protect your investments against market fluctuations. For those new to investing, index funds and ETFs are excellent choices as they provide exposure to a broad market segment with lower fees. Starting early and staying consistent sets the foundation for a stable and prosperous financial future. 2. Max out retirement accounts. Retirement might feel like a distant goal in your 30s, but this is precisely the time to make the most of tax-advantaged accounts like 401(k) and IRAs. Contributions to a 401(k) not only grow tax-deferred but also lower your taxable income for the year, providing an immediate financial advantage. Many employers offer matching contributions, which is essentially free money you shouldn't leave on the table. For example, if your employer matches up to 5% of your salary and you contribute that amount, you're effectively doubling your investment instantly. Beyond your 401(k), consider opening a Roth IRA, which allows you to contribute after-tax income. While contributions are taxed up front, withdrawals in retirement, including earnings, are completely tax-free. This is particularly advantageous if you anticipate being in a higher tax bracket in the future. Roth IRAs also offer flexibility, as you can withdraw your contributions, but not earnings, without penalties if an emergency arises. Maximizing contributions to these accounts early in your career allows your money to compound over decades. Additionally, diversifying between tax-deferred 401(k) and tax-free Roth IRA accounts creates a balanced strategy to manage taxes in retirement. By contributing consistently and taking full advantage of these accounts' benefits, you set yourself up for a comfortable and financially secure retirement. 3. Diversify with real estate. Real estate remains one of the most reliable ways to build and preserve wealth, offering multiple avenues for returns. Owning a rental property, for instance, provides both passive income and long-term appreciation. The rental income can cover your mortgage and other expenses, eventually turning into a steady profit. Moreover, real estate often appreciates over time, allowing you to build equity that can be leveraged for future investments or retirement. For those unable to purchase physical property, real estate investment trusts, REITs, or crowdfunding platforms are excellent alternatives. REITs allow you to invest in a portfolio of real estate assets without the hassle of property management. These investments often pay consistent dividends and offer an easy way to gain exposure to the real estate market. Crowdfunding platforms, on the other hand, let you invest smaller amounts in larger properties, such as commercial buildings or multifamily units, spreading your risk across multiple projects. Diversifying your portfolio with real estate not only reduces dependence on stock market performance, but also offers unique tax benefits. Real estate investors can deduct expenses like property taxes, mortgage interest, and depreciation, which can significantly lower taxable income. Including real estate in your investment strategy ensures a balanced approach to wealth building, with both stability and growth potential. 4. Invest in yourself. Investing in yourself is one of the most rewarding strategies for building wealth, as it directly impacts your earning potential. In your 30s, consider pursuing advanced education, certifications, or specialized training in your field to increase your marketability and income. For example, earning a master's degree or obtaining industry-recognized certifications can lead to promotions or higher-paying opportunities. This decade is also a great time to explore side hustles or entrepreneurial ventures that align with your skills and passions. Networking is another critical aspect of self-investment. Expanding your professional circle can lead to valuable connections, job offers, or collaborations that might not have been possible otherwise. Attend industry events, join professional organizations, and stay active on platforms like LinkedIn to build meaningful relationships. Networking not only opens doors, but also keeps you informed about trends and opportunities in your field. Your well-being is equally important. Investing in your physical and mental health ensures you have the energy and focus to achieve your goals. Regular exercise, a healthy diet, and stress management techniques like meditation contribute to overall productivity and resilience. By focusing on continuous self-improvement, you enhance both your career trajectory and your ability to manage and grow your wealth effectively. 5. Take calculated risks. In your 30s, you have a unique advantage: time. This allows you to explore higher-risk, higher-reward investments, such as growth stocks, startups, or cryptocurrencies. These types of investments can generate significant returns, but they require careful research and a disciplined approach. Start by allocating a small portion of your portfolio, no more than 10 to 15%, to speculative investments, ensuring the rest remains in safer, diversified assets. When venturing into riskier investments, understanding the landscape is crucial. Research companies thoroughly, keep up with market trends, and consult financial advisors when necessary. For example, investing in emerging tech companies or startups could yield exponential growth, but it's essential to evaluate the potential risks and rewards. Similarly, cryptocurrency investments have gained popularity for their potential high returns, but they come with volatility and uncertainty. Calculated risks also include exploring alternative investments like private equity, peer-to-peer lending, or commodities. While these options can offer diversification, they require a long-term mindset and an appetite for volatility. By approaching risks strategically, you position yourself to capitalize on lucrative opportunities while safeguarding the majority of your wealth. What are you doing today to secure your financial future? Share your journey in the comments, and don't forget to like, subscribe, and share this video for more life-changing financial insights.